Options channel. Come for the investing and stay for another video of how to make passive income via options trading, which I call it Pivot. This video is for beginners and or any size accounts. In this video, you will see how I make passive income by trading options for as little as 1 hour a week. I'll also show you a live trade towards the end of the video, and this is another video I've been so proud to share because the strategy I use are simple, effective, and consistently make you money without risking of blowing up your entire account. After making $300 plus last week, guess what? Even better. This week, I nearly doubled it. I made $583, which helped me to accelerate my financial goals while enjoying things that are more important to me. If I can do it, you can do it too. That being said, this is the week that ended today, November 29, 2024, expiration trade. I have 100% win rate. I have placed 12 trades in total, made 583, and guess what? Out of the 12, this is the best part. 10 out of 12 all expire out of the money. You know what that means? That means after you place the trades, you don't have to do anything. You set it and you forget it. And that's the best part of passive income. You don't want to be staring at the screen and try to manage this trade and wondering where the trade's going to go. And only 2 out of those 12 require your attention, and that attention is just to make you more money. They are closed with higher profits. And those are the 2 trades I'm going to share with you. Before that, the total profit 583 were traded only an average duration of 8.5 days, which means just a little over a week. So these are the 2 trades that require my attention today, which is trading on Mara. Strategy was a ratio call. Initially, the credit I received on these 2 trades were $21 and another $14. So it's supposed to be like $35, but ended up closing in like almost $40, which I will show you at the end of it. So this is how we're tracking our weekly profit right now. Last week 361, this week 583, and the monthly profit, the month of November, even better than last 2 months. But hey, we're not taking it for granted. December, who knows what it's going to bring for us, right? So there won't be any winners without any losers. So we do expect sometimes the losing trades are part and parcel of this process. We have to manage it. We have to understand the losing streaks as well as much as we enjoy the winning streak. But in general, the monthly balance, we're making $7,000 over the last 3 months. So this week, we open new trades that's going to expire December 6, 2024, expiration date. Guess what? All of them are somewhere ratio call, ratio put. They're new trades, same plan, right? And are we going to collect $212? We'll see. So if you made it this far to this video, please like, subscribe so that you can get notified for the next week and how I perform. And hey, if I can do it, you can do it too, right? That being said, I want to kind of go over, if you're new to this channel or if you're new to in general in option trading, I want to show you how the white call ratio spread is managed and what that means. And some people call it 111. So call 111 or white call ratio spread, it's a type of ratio spread which usually built on the call side of the option chain, right? That includes buying one call option and selling multiple call options with a higher strike price. The outlook on this strategy is neutral to moderately bullish strategy. It is an omnidirectional strategy. That means regardless of the direction of the stock price, you are guaranteed to make money, profit. That being said, I won't spend too much time on this. If you already know the strategy, I'll just quickly go over this. So those of you who don't know, I'll definitely going to make another video so you can actually be better educated on this. So this is NVIDIA. Today it's actually closed at 138 after coming down from 150 to all-time high stock price. And so you can exercise call ratio spread on this strategy. The first criteria is, what is your outlook on this? Are you neutral and bullish or neutral and bearish? Right? Some may see bearish because it just topped and then it sold off, and it could possibly go lower, or it could bounce back. Who knows, right? I mean, you can see this candle, it could possibly bounce back. Another is you have to be able to expect a range with support or resistance. So in general, I am bullish on NVIDIA, right? I mean, you're betting against AI. Whatever your outlook is, doesn't matter, right? So in this example, if you want to build a call ratio spread, then you believe that 142 and 150 is the expected range, and then the stock may not go no more than past 154. If that's what your outlook is, then what you do is you buy 142 strike for $2. That's $2 out of your pocket, and then you sell 150 call, and that will give you $1.50. That's because the 142 is closer to the money, so it's more expensive. 150 lower delta, away from the money, at that point out of the money right now, so it's cheaper, so you get $1.50. If you just look at these two, it will be a debit spread, right? -2, 1.5, your net would be -0.5, so that would be, you have to pay 50 cents out of your pocket. Instead of paying out of your pocket, what we do as an option seller, you want to earn a passive income, you sell another 154 out of the money, which you believe that the stock will not go past a 154, right? So you sell, if you sell 154, you get $1. And these numbers are arbitrary, just for you to better understand it. I kind of rounded up here. So in general, if you add all these numbers, the net credit of 0.5, so you will collect 150 cents. If the stock price stays where it is, let's say in the next 2 weeks, 3 weeks, stock price goes up, come back down, and stay where it is at 138, you collect 50 cents. If the stock price goes to 142, you collect some profit. If the stock price goes to beyond past 150, you collect maximum profit. In this case, it will be $8. And then as long as it doesn't go past 154, you will make money. Once it go past 154, and then there will be some sort of loss will start incur. So let's take a look at the P&L here. So P&L here, remember, we buy one call and then we sell two calls. So in this graph, the up and down, the vertical is a profit and loss, and the underlying stock price go from left to right. As you go to the right, the stock price goes higher and higher. So most likely 138 will be somewhere around here, right? The current price right be. And then your 142 is going to be here. And then this is not exactly the distance here, but you get the idea. So 142, then you buy the 142 here, you will sell another one at 150. So that will create the debit spread. And to fund the debit spread in credit, you have to sell another call here further out the money, right? So which is the highest strike price. In my early example, that would be $154, right? So if the stock price stays where it is on the left hand side, 130, 135, 138, you will collect the net premium. If the stock price start going past your long call, then you will start making money, collecting money. And then if the stock price finishes between this zone, right, between the two short calls, then you will make the maximum profit. If it goes past, there was a break-even point. The break-even point is basically between the two spreads plus your short call. If you don't know how to calculate it, that's fine. Your broker will tell you how to calculate it. Will tell you the value when you send the order confirmation. And then once it past that, then you will incur the max loss here. So with that, we'll move on to the next video of the live trade here. Okay, so before I go over my live trade in details, I want to note two things: the time of the trade and then the day of the trade. So this live trades happen the Friday after the Thanksgiving, which is on November 29, 2024. On that Friday, the stock market closed 3 hours early. So in the Pacific time, the stock market closed at 10 a.m. So right now it's 9 a.m. and 53 minutes. So I am less than 7 minutes away from the market close, and I was able to capture this in details. So you're looking at the Mara on the daily chart, and then the stock is right now trading at $27.43. And we're gonna take a look at the 1 minute chart, in which you will see the stock actually got rejected from the $30 range, and then right now it is trading at $27.35. So next we're gonna go over my current positions that I have entered the trades last week. So as you recall, the call white ratio spread includes buying 1 call options and selling 2 calls, right? So I made 2 trades. My first trade is buying 25.50 call and then selling 26.50. That creates a $1 white debit spread. And to make this a credit, to receive the credit at the front, I sold another call at $30. So that allows me to collect the credit at the front and create that $1 white spread. And as you can see, this $1 white spread now is becoming in the money, right? So at on the expiration date, which means I'm gonna collect $100 in profit because the $1 spread plus the credit premium that I collected it. So my second trade is similar to that, but it's placed on slightly different. I bought one at 26 call option, sold at 27. Again, create that $1 debit spread, and then sold this at $30 again. So at $30, I have 2 contracts, and the rest, 25.50 pair with 26.50, $1 spread, and then 26 and 27 pair, another $1 spread. So both dollar spreads are in the money. So there's actually $20 in profit plus 25 for $30 credit that when I sold this call white ratio spread. So in profit, I will make somewhere around $230 plus or minus commission on this trade. As you can see here, on the P&L to confirm, I have the profit at $233. And we're gonna close this trade soon. One thing to keep in mind is, remember I mentioned that how the call white ratio spread works. The purple line is your profit when that's going to happen at the end of expiration, and then the blue line is what you expect to receive if the trade works out. So the purple line really comes into this blue line on top of each other at the it happens on the day of the expiration or right before it closes to the expiration, right? So on this trade, I would normally close as a white call ratio spread, but instead I will not close at $30 strike, and that's because $30 got rejected earlier. So I will close at 26.50 and 25.50 and 26.50 as a credit spread. So to make sure this order actually goes through properly, I'm actually going to send it as a 99 cents as opposed to $1. Remember, I only have less than 3 minutes for this trade to work out. It's the fact that I'm trying so hard to get this through. But now you can see the actually trade went through. It was confirmed. I was able to sold at 25.50 and 26.50 as a credit spread. So now I'm just going to go ahead and rush through and sell the next credit spread 26 and 27. You can see how the credit spread, the P&L looks, and that the purple line you see those like lines are bouncing back. That's because the stock market is about to close. So at that point, your Greeks are going crazy at this point, right? If you happen to look at the Greeks right before the market close, and especially at expiration, they are jumping all over the place, and that's what you're seeing reflecting it. But in this case, we should be able to close it in profit properly. So we'll see how actually pans out. So I chose the 26 and 27, right click, and then try to close it as in credit spread. So to make sure it goes through, I'm actually setting a little bit lower than the dollar spread. So the current price is $27.40. So with 2 minutes left, probably not gonna go down to $27. So I'm just gonna send it as a 90 cents as opposed to $1. But this is interesting. As I send it through at 90 cents, somehow the broker was able to execute at 99 cents. So actually it went perfect, even though I sent it as a 90 cents to execute it. So now at this point, you're wondering, hey, what do you ended up doing the other, the $30 strike? Well, I'm just gonna leave it there, right? Because it's gonna expire anyway, right? So why should I touch it? Just let it expire. Instead, I'm actually gonna open up the trade for next week using the $30 strike. So for the next week expiring December 6, 2024, I did a similar trades. So I bought one at 28, you can see, sold at 28.50, and then sold another one at this time around 32, because just because stock price got rejected at 30 this week doesn't mean that it will be rejected 30. So crypto is really going up, so it has potential of going past than 30. So I'm gonna play safe a little bit, and at the same time try to be aggressive on the debit spread on 30/20 and 20/50. So let's take a look at the PNL chart right here. Okay, as you see on the PNL chart, so I will be collecting the premium $100 up front, and then as the stop price comes into between 28.50 and then the two short calls $32, I'll be collecting a maximum of $200. So with that, so this is how I trade options for passive income, and sometimes you don't even need an hour. You just need 10 minutes, and if you know what you're doing, 10 minutes is a long time, and you can have a good 10 minutes. And happy Thanksgiving to you all. This year has been great. I really appreciate it. Subscribe for more of these videos upcoming, and I'll see you in the next video.